Hello my friend and fellow trader Will here over at Pips and Gains, and welcome back to another trade analyst video. Today we're going to be looking at a possible trading scenario on the Australian dollar, Japanese yen. We're going to be breaking down the charts, looking at key areas and the likely scenario of what will happen next. So before we get into the good stuff, the reason why you've clicked on this video to watch it, if you haven't yet followed me on TradingView, make sure you head over there and follow me so you can get these ideas before I actually post them as videos. I'm regularly posting great trading ideas over there that regularly bank hundreds of pips, and you can head over to there, follow me, and yeah, get access to them. So let's head over to TradingView. First off, we're going to look at the monthly charts. If you're familiar of how I analyze the markets, I always look at the higher time frames, weekly and monthly, to look for key levels, and then I'll use the lower time frames for evidence of momentum slowing down and price action slowing down coming into these areas. So this is the chart on the Australian dollar, Japanese yen. It's only been, I wonder if I can get a better chart there. More data, so Forex.com. There we go. So Saxo Bank has it going all the way back to 97. So if we look at this chart, we are fast approaching the top of this huge range here on the monthly charts. And I'm going to put in this 105 level, which we hit 2 weeks ago on the intervention. So fast approaching a key area on the chart where we're likely to get some selling pressure. We're just going to draw that. Make sure that's red. You can see 2 weeks ago we actually got a first reaction at this swing high here, and the market is popped down after those 2 bouts of intervention from the Japanese officials, and the market is retracing back up to this level here. We also want to draw the newly created buy demand zone here. Now the reason that is valid, because we'll mark this previous resistance, new support. Now, the reason that is valid is basically because we had the swing high test of the 99 resistance. It dropped, and then we get this swing low, pause in the market, and the market just takes off, breaks clean through the 99 resistance up through the 100, and heading up towards these swing highs here. So that is why that is valid. If we look at the weekly charts, again, we can see this red candle here when we had that those 2 bouts of intervention 2 weeks ago. The market is rallying back up towards this area. So what I want to see happen now, and what is most likely to happen, we'll just zoom down to the daily charts, is we're getting very overextended again and very, very overbought. What the likely scenario is here, we'll get a pop up above 104 towards 105, and then we'll get the sell-off possibly down to this area here, and then down to here. So reason I'm liking a sell-off, if we just see if we can zoom into, so it's slowly trickling up. We're not getting any real volatility moves, huge candles like we did here. It's slowly trickling up to those areas. If we look at my volatility dashboard, just hide this on MT4. The stochastic dashboard, we can see the daily chart is approaching the 100, weekly chart is approaching the 80 on the stochastic. If we look at the RSI dashboard. From the 4 hour up, they're all approaching heavily overbought areas. Once this total value, and it's approaching the total value of 600 across all time frames. On the RSI dashboard, once that goes over 600, this will flash red, and it is likely going to be a sell setup on the horizon. So what I actually want to see here is, again, a move up, and then I'm going to be using my TRFX indicator, and just want to see that pop up outside those bands again, then get a sell off, and the target will be 98. Likely get a reaction there, and then a move down into this newly formed buy demand area, which starts at 96,500. Again, just looking at the monthly charts. Now, we could get an overextended move up deeper into above 105, but again, we just have to wait for the right signal. So, move back up. These are key areas in the chart where we're approaching now. Just a move back up into this zone, and then looking to sell that down to there. So that's what I'm looking at on the Australian dollar, Japanese yen. It's a nice setup, and it's likely to start playing out over the next few days or week. Yeah, so it is waiting for the move up above 104 towards 105 into this selling demand area here. We've had this on the monthly charts, and the target is going to be, the first target is going to be the 99 previous resistance, now support, and a deeper correction down towards this newly created buy demand area or zone, whatever you want to call it, down at 96. It's basically just an area where buyers have been able to push a new leg higher. So that is how I'm seeing the scenario on the Australian dollar, Japanese yen. Let me know what you think in the comment section of the video. If you want to get access to my TRFX indicator absolutely free, simply there will be a link in the description area of this video. Head over there, just enter your details. Make sure you're following me on TradingView, okay, the FX Ace, and just follow the instructions you receive in the email, and I will add the TRFX indicator to your TradingView profile. So that is my analysis on the Australian dollar, Japanese yen. It's good to be back making videos. Don't forget the like and subscribe button, and I shall see you on another trading video very, very soon. Well over at Pips and Gains.